Welcome back to the show, everybody. We got a lot for you, and Tether has a new CEO and a whole new plan, along with so much more. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on X, YouTube, and digperspectives.com for exclusive content. Right now, we're $4.19 trillion market cap, almost 4.2. We're up 2.1%. And take a look at these numbers: 116,000 plus for Bitcoin, Ethereum 4,700 plus, XRP is 317, and it's up 4.3 on the 24, but we're up 13% on the 7 day, ladies and gentlemen. Look at the range of price here, ranging between 302 and 318. We are still at the top side of that price range, even on a Saturday morning. This is super exciting for me that it's holding strong like a bull and moving upward even through the weekend. Now, that is super exciting. We will keep an eye on it. And I want to show you this. This is Realty Mark. I tell you about the amazing opportunities to get a beautiful place down in Destin, Florida, or the Panhandle itself, whether it's Santa Rosa, Panama City, all the way over to Sandestin. I mean, you can't, the opportunities are remarkable. And I literally just went there myself. And I tell you what, it's absolutely gorgeous. This is just some of the pictures of the places around these different towns, and it's absolutely, you won't believe it. You feel like you're stepping into a dream. It's so incredible. Look, the water is like clear blue green water like you get in the Bahamas, but you never have to leave the continental United States. That's the incredible part. And then you could get a beautiful home like this, just steps away from the beach. Look at this thing. It's incredible. And I tell you something, these prices compared to the West Coast, it's a no-brainer. No income tax. Florida's getting ready to eliminate property tax. Are you kidding me? These opportunities are remarkable, and I have been made it very clear. I am absolutely shopping in this area for my family, and I think you would like it too. All you got to do is go to the link below the video, golfofamericaxrp.com, and then text or call Daniel. And you know what? He's going to help you understand, or help understand what you're looking for your family and your investment needs. And they're going to make it happen for you. So whether you want a second home, a first home, or whether you want a second home that you could actually rent out and like counter the fees, taxes, and everything else on the home, they can make anything happen that you want to make happen. And I know a lot of you, like me, are just waiting for price to move so you can strike. And you know what? You need to reach out to Daniel, golfofamericaxrp.com. Text or call him when you get signed up, and he will get you ready for what you're looking for. Let's start right here. Ripple Swell is the most important event of the year, and this November it returns to New York City. Yeah, that's right, where Wall Street is. And they got a lot of Wall Street attending Swell's event this year, and I'm super excited about it. I know you guys are too. But I just want to say that, you know, I can't play the music in this video because it appears to be copyright. So I don't want to take the chance and play it. But nonetheless, they're very excited about everyone who will be speaking. And a lot of those people will be New York Wall Street folks. And we've gone over that before. Look here, U.S. government posted $345 billion deficit in August, with spending rising to 689 billion. All right, now listen to the rest of this.
The U.S. government posted a $345 billion deficit in August, and Christie's closes its NFT shop. You're watching CoinDesk Daily. I'm your host, Jen Sanasi.
And BlackRock is exploring placing tokenized ETFs tied to real world assets, which we covered yesterday. And it's also being floated now that Rick Ryder from BlackRock said to be climbing the ranks of contenders for the role of the Fed chair when Jerome Powell rolls out in May. And here, BNB, we reported yesterday that XRP was back in the top 100 global, and they're knocking on Citibank's door for market cap. Well, BNB overtakes Union Bank of Switzerland, the world's largest private bank in market capitalization. Crypto is just growing at a breakneck pace. And I covered this yesterday as well. BlackRock moves to tokenize stock ETFs after the $50 billion Bitcoin fund success. This is bridging Wall Street assets with blockchain rails, marking institutional finance's boldest step into tokenized real world assets yet. It's coming in a big way, ladies and gentlemen. Listen to the gentleman here from Ondo Finance, who's tokenizing a lot of this for BlackRock already on the XRP ledger with US Treasuries.
Are tokenized stocks and ETFs the next frontier?
We would like to believe it is. Typically, it's very hard to predict which assets actually get adoption, but when you think about the latent demand globally that is out there for these assets, I think it is pretty significant and a lot of people underestimate it. Right now, when you look at stable coins, we're already coming up on almost $300 billion, in large part because hundreds of millions of people globally have figured out that the stable coin is a very easy way to get access to the US dollar, and by putting it on blockchain rails, it actually becomes better than if it's just in a bank account because you can freely send it around 24/7. The same thing has started to happen with tokenized treasuries. It went from $1 billion or so 18 months ago to now $7 billion. And we expect the same thing to start to occur for stocks and ETFs. There are about 400 million people outside the US that have a crypto exchange account, but most likely do not have a brokerage account because access to brokerage accounts historically has been a lot more difficult to get. So we believe you'll start to see crypto exchanges and crypto wallets start to list stocks in tokenized form, really opening up access to that global audience that historically has not had that.
There you have it right there. Very well said by Ian DeBode from Ondo Finance. Now let's listen to the CBOE talk about the power of these products. Here's Catherine Clay.
CBOE is building when it comes to digital assets. We're talking about Bitcoin and Ether now. But where are you looking outside of the products that you are already offering and the ones that you are waiting regulatory approval on, like this one?
Yeah, you can imagine that when we get, I'm going to be optimistic here, when we get regulatory approval, this methodology has application to additional products as well. You might think Ripple, Solana, name your underlying token. This could be extensible to other digital assets. It could also be extensible to other types of assets as well. So, we're trying to just get these first two over the line, and then I think you'll see us innovate quite quickly.
CBOE is building.
Okay, CBOE will innovate with Ripple and others quite quickly once legislation is passed. Loving that for us, ladies and gentlemen. That's the CBOE, which obviously, along with the CME and NASDAQ and the New York Stock Exchange, were just granted permission by the SEC and CFTC to list tokenized stocks and crypto. So how about that for a piece of news again on a reminder on a Saturday morning? And a reminder that yesterday, Rex Osprey XRP Spot ETF launched yesterday. That is a remarkable, remarkable moment. Let's see right here. And now we got to focus on not only getting one, but more, because DTC just listed Canary Capital XRP ETFs on their platform of the DTCC. Now, this doesn't mean it's live. It doesn't mean it's guaranteed to go live. But I think Eric Balchunas said it best. He doesn't remember a time essentially or basically where the DTC has ever listed something and it not eventually launched. So we're waiting for the SEC to grant approval, but it looks like the horses are lining up in the gate and things are getting ready to go crazy. And this is the kind of horses we're waiting on, ladies and gentlemen. Well, we've already got one horse out of the gate running. Do you think these people that have got these spot XRP ETFs aren't excited? I mean, they're watching a horse take off right now, like Rex Osprey, and they're like, we want our turn. That's what's going on here. The money is just waiting and being held back. When they let it go, it's going to be remarkable. And here's breaking news. Bo Hines, former head of Presidential Council of Advisors for Digital Assets, has been appointed the CEO of Tether, US. And here we see the quick exchange acknowledging that.
Oh, it's exciting. One, I'm humbled and honored by the opportunity that I get to work with the best and brightest people in the space. Obviously, Paolo inventing stablecoins, and then the second rendition of this chapter being a U.S. regulatory system that I got to work diligently on over the course of the last 8 months. It's just all coming together. And, like I said in the interview in the fireside chat, I felt like this was the best fit for me. given the fact that I think this will upend our financial system in the United States. I think that people will be able to move money more freely. They'll have instant settlement times, cheaper transaction costs. And we want to see USAT become, the institutional product that people in the US use in order to transact. And I think that's something you'll see happen very quickly. And, just again, extremely excited, extremely humbled to be sitting here with Paolo. Is one of the stalwarts in the space that obviously Genius has done what it was supposed to do, what we intended it to do, which was to bring the innovators to the U.S. and actually engage on U.S. soil. And today marks an incredible monumental feat of doing so.
So there you have it. And I just want to remind everybody here, proving to the world that that's how bad USD Tether actually is. It's easier to launch a new digital dollar than make USD Tether compliant. And they're trying to put a bow on this, but that's the truth. And we've been right about it. It's not allowed in the US. And it's much harder to get USD Tether flushed out and make it regulatory compliant, and much easier to start a brand new digital dollar from scratch and introduce that in the US. So we've been right about that the entire time, because ain't nobody looking forward to starting a new project unless you know exactly what we just shared here. So, and let's look at it. Cowboy Crypto. Boy, I tell you what, this guy's got one hell of a shovel when he starts digging. Cantor Fitzgerald will manage Tether's reserves for their new U.S. stablecoin, USAT. Howard Lutnick stepped down from Cantor to fill the role of Secretary of Commerce. Now his two sons run the company. Bo Hines left the government digital asset role and went to Tether to become the CEO. You could see that closed loop of people right there. There you have it. But why is all of this happening at all? And ladies and gentlemen, it comes back to what we've talked about on this channel time and time again. It is because we had the Plaza Accords in 1985 where they devalued the dollar, and that was to help out France, Germany, Japan, and a couple other nations. And the reality is we're going to see it happen again. Just like when the U.S. Treasury Secretary told us we need a grand economic reordering. Well, listen to what James Rickards says here. It lines up perfectly. And this is all about ushering in a new system while they do it.
There's a lot of buzz around the world of, the BRICS are coming up with an alternative currency, and people are getting out of U.S. treasuries and losing confidence in the U.S. dollar. U.S. budget deficits are out of control. The U.S. debt is out of control, et cetera. And none of that is basically true. These are talking points, but they have to be put in a context. The U.S. debt, $37 trillion, that's a big number, for sure. But you can't think about that without comparing it to the resources. What is the GDP behind the debt? What are the assets on the other side of the balance sheet? And those are the kinds of things the Trump administration is talking about. And so one of the most influential advisors in the White House right now is Stephen Moran. He's an economist, but he wrote a paper last November on basically reconfiguring the entire global trading system. Pretty big claim. In there, he calls for something called the Mar-a-Lago Accord. And by the way, that was the title of chapter 6 of my book, Aftermath, which came out in 2019, last time I was in Australia. So I'll take credit for coming up with the name. But his version of the Mar-a-Lago Accord looks at tariffs, trade, and exchange rate values, and kind of getting to your question, Jordan, about the Aussie dollar. Now, let's say I put 20% tariff on the United States, and I put a 20% tariff on a trading partner. So some goods are, let's just say 100, it could be 100 million or whatever, but 100 as a measure, and I throw a 20% tariff on it, now it's 120. But what if the trading partner devalues its currency by 15%? So it was at par, let's say hypothetically, and you drop it from 100 to 100 down to 85 to 100. Well, that negates the impact of the tariff, because yes, the tariff marks up the price, but if you're the producer and you can lower your local currency costs, your labor costs and so forth by devaluing your currency.
Now, real quick, this is where I come in and go, but if you have a bridge currency like XRP, then we're not affected with that exchange. And the only people that would be affected with that devaluation would be the citizens of that country that have that currency, because a bridge currency would sit in between and isolate that manipulation, so it wouldn't be affected through the FX pairing in that regard, right? You could eliminate that danger.
You dilute the impact of the tariff. So what he is saying, and indirectly what the White House is saying to U.S. trading partners, is we're going to put these tariffs on, so that's a given, but don't you dare devalue your currency. Sure. We're going to devalue the dollar. And any trading partner that tries to offset the tariffs by devaluing its currencies, there are going to be consequences to that. And he uses what I call the traffic light system. He says red, yellow, green in the U.S., that's the traffic light. But he said we're going to divide U.S. trading partners into three categories. So green, you're a friend, you work with us, you know, we've negotiated the tariffs, you accept the tariffs, and you accept the fact that we're going to devalue the dollar. Yellow, you're okay, you're not an enemy, but you're not our best friend, and you may suffer higher tariffs. Red, you're an adversary, clearly China and Russia. I think it's a mistake with Russia, but China and Russia would be in that category. You're going to get you're going to get tariffs, if not sanctions, et cetera. But in addition, this is where it gets tricky. He injects national security considerations. Like, wait a second, this guy's, an economic advisor, maybe a Fed governor, but what's he doing talking about national security? Sounds like Henry Kissinger. But he said, if you're in the green category, you will get the benefit of U.S. military protection. Sure. You'll get the nuclear umbrella and more. If you're yellow, we may work with you. And if you're red, you can expect that we'll be in an adversarial position. So the significance of that is he's putting military might and security guarantees behind his claims about the U.S. dollar and exchange rates. Now, that's only been done twice in U.S. history. One was between 1971 and 1974, when Richard Nixon closed the gold window. It suspended the ability of foreign trading partners to redeem dollars for gold. The second time this was done, where the goal was to devalue the dollar, was 1985. James Baker was Secretary of the Treasury. Ronald Reagan was president, but this Baker really took the lead on this. And using some of these indices I mentioned, the dollar was at an all-time high, and Baker said, no, it's not good enough. We have to devalue the dollar. So the dollar dropped about between 15 and 20%, depending on the cross rate at the time. So here's the third instance of the U.S. engineering a devalued dollar. This isn't the markets doing this. This is the U.S. Treasury insisting on it. There's a lot.
And there you have it. This is the U.S. Treasury insisting on it, just as the U.S. Treasurer has told us we're going to a grand economic reordering. And from the Plaza Accords to Mar-a-Lago Accords, which I spelled wrong in this tweet months ago, a new system is being put into place, and XRP Ledger is smack dab in the middle of it all. And once it's in the middle of it all, they can play their little manipulation games. But if we're holding XRP, it doesn't matter, because you're not affecting us. You're affecting people in your own country when you devalue the dollar. And I have a feeling they devalue the dollar and then bring XRP in heavily to trap all of that ability to manipulate currencies thereafter. That's how I'm seeing this, ladies and gentlemen. And with that, let's take a look at this. Crypto Insight UK Will says strong 3-day close for XRP. He says a close above our descending trend line, minimum target 360. Bullish cross on the RSI. The wave count is still valid. Time not to scale. He says here, looking for some strong follow through price action into weekly close tomorrow. So we'll keep an eye on that. We've got it. Here we go. Dark Defender says the power of waves. Initial weekly resistance is being broken right now. XRP targets, he says 439 and 585 Fibonacci levels. Supports are 301 and 285. As clear as it gets. I say let her rip, ladies and gentlemen. Let all the ETFs rip. Let the Clarity Act get passed and signed into law. Let Ripple get the banking charter and the Fed master account. And then let's come back and talk about the charts. Not financial advice from me or anyone else. It's just my digital perspectives. I'll catch all of you on the next one.